Ant has a ways to go yet to shore up investor confidence?
Yeah, that's right, Kathleen. And it's not just about looking after investors here, because as we know in China, really the focus needs to be on the company and the staff in it first. So this is also about trying to retain top talent at Ant. Clearly a big concern for the company, because when you take a look, or as you say, it is trying to refocus on its bottom line and perhaps even look ahead to an IPO. So the confidence in the company, as you know, has been shattered. When you look at the valuations, for instance, this was a company that was once thought or envisioned to be worth more than $315 billion ahead of its valuation. Today, we're looking around the near $80 billion mark. So 315 down to 80, that is a huge gap. And how do you go toward plugging that? Well, the company is now looking, and we understand, to buy back nearly 8% of outstanding stock. So again, as I say, trying to rebuild confidence in the company, inject some much needed capital into it. And we also understand that Alibaba could actually be looking to sell its shares to Ant, and that would again be part of its planned buyback. As you say, this is wrapping up now a near 2-year or more than 2-year investigation into the company.
What does this mean for the path to an IPO? Is it going to be enough to lure back investors?
Yeah, that's the big question as well. Certainly it seems, or at least the reaction, and we're getting through the read-through from analysts of the company, is it's one step closer, but it's not necessarily enough to catalyse a relaunch of the IPO in the near term here. This is something that our Bloomberg Intelligence team has been looking at quite closely, and they essentially say that a share buyback will not speed up the path to a listing here. Essentially what they're taking a look at is earnings. So for 2022, they came in around 31 billion yuan. That was almost half of the near 60 billion yuan from 2020. So Ant just needs more time here to build up its profit base. After that tech crackdown, the near $80 billion price tag that represents the amount of the share buyback, that translates to about 18 times earnings. That's higher than the average of 5 times earnings of Chinese online lenders and around 13 times the average of fintech firms that they track. They're also saying that perhaps the actual valuation of Ant could be lower, and they're calculating it up to only $57 billion.